everything started to go sideways whenever Kuppi posted this on Twitter as an answer to when equities moves, talking specifically about uranium equities, right? He said, never, they're grossly overvalued. And then obviously people got into this frenzy, and even my cat is trying to take part in this. She has her own opinion on what he meant by that, what he did mean by that, etc., etc. So let me just clarify to you what I think is happening here and why people need to take a step back and look at the whole, right, Kitty? Yes. Guys, Kuppi is considered to be like one of the saints of the uranium trade, which is strange, but let's face it, we're in a cult, so let's call it what it is. The thing about the thesis is that it implies that the price of the commodity uranium will keep going up for the immediate future or for the foreseeable future. We'll see how that plays out. The fact that Kuppi doesn't think that the miners have a future, he actually clarifies this a little bit later, saying they're more of a trade and not a long-term investment. I totally get it. Like, look, mining is a horrible business. The whole industry is very difficult, and you get a net negative on your investment if you just put money to work and expect things to pan out. You have to pick the good ones. You have to get your timing right. There are many things that need to go right in order for you to make money with mining. This is why I make these videos, so that maybe you and I can learn from each other and we can help each other out. But Kuppi's a money manager. Guys, he's a hedge fund manager. He has to survive every quarter. Do you think that a hedge fund manager should put his or her money into mining investing in what has been considered to be one of the worst downturns, one of the worst bear market in the history of mining? I don't think so. He's smart. Look, Kuppi has, had lots of success, and he always looks at things that were and that are changing now, things that are on, their way out or their way in, and he makes a bet of people haven't realized that things have changed yet. My cat is just going wild here. I'm just gonna let her, participate in this video right now, because, well, who doesn't love cats? So if she jumps on my head and I start to scream wildly, I think I'm gonna get more views from that. So, so amen. And Kuppi needs to make sure that his clients are happy with their quarterly and yearly returns. That is the ruler here. You have to survive. And in order to survive, you have to be able to look at companies and compare them to everything else that you can put your money towards. It needs to be a sound financial story, okay? And if you're looking at different companies, then you're gonna be forced to do something like this. I'm just gonna share my screen with you and tell you what is meant by what he possibly thinks, being grossly overvalued. You look at Cameco. Okay, Cameco has done really well this year. Like, wow. For the size of the company it is, considered to be very small in the real world, but very large for us as a producer, this is amazing. This is really great. But look at the PE ratio. I don't know if this is up to date, but I've seen numbers from 60 to 92. That is not considered cheap in the real investing world, okay? We have to take our rose-colored glasses on and think about what a hedge fund manager would think. That's not undervalued. You might be able to make a case for this being undervalued. Did I say overvalued? Yeah, it's not undervalued, it's overvalued, okay? So you can make a case that in 2 years from now, it will be that way, but right now, that's not what I'm seeing. That's not what he's seeing, I bet. You look at Kazatomprom, the largest, the cheapest producer of uranium in the world. You look at the P ratio, it's 11.75. That's considered cheap. But guess what? When you're a money manager, that's not the only thing you're looking at. You're looking at the price and you're looking at the risk. It's value versus risk. And if you put lots of money long-term in a uranium miner in Kazakhstan, which is a country most people cannot place on the map, let alone spell, and they're having serious issues with transportation, with getting material to their mines, getting chemicals to their mines in order to extract the material and just getting their shipping route figured out because of the war, you're going to get killed. The risk is too high for what it is. So it needs to be a trade. It needs to be something that's watched over like a hawk. This is the game he's playing. You might be playing a completely different game. If you're not a money manager, welcome to another game. Now you have to decide what game you're playing. You have to decide what your edge is. But I'm going to tell you what I think is not overvalued in the mining world. But then again, it's something that Kuppi would 100% disagree with because of what I just told you. Little word that starts with R and ends in S, risk. If we take a look here at Global Atomic, I mean, look at this baby. Of course, it had this massive drop here of about 50% when, you know it, Niger had its own political coup. Amazing, something out of a movie. And so they were struggling already. You know, it's hard to get financing for something like this in a jurisdiction like Niger, and then things just completely collapse. And now they're catching a bit here, but you look at the market cap, it's just under 400 million. Let's call it 400 million. You look at their main project, DASA. DASA is a project that on its phase 1, which is not the whole project, it's just the nice, I guess the easiest, fastest stuff to mine. They present a ridiculous sensitivity table that only goes up to 60, which is everybody's base case. Okay, that tells you the quality of this project. The after-tax NPV 8 is giving us $661 million for phase 1 of DASA only. Now, you can pretty much bet your bottom dollar, on average, they are not going to sell uranium for 60 bucks. They're going to sell it for a lot more. So what are we talking about? Are we talking about 900 million NPV? Are we talking about $1 billion? Are we talking about more? And by the way, this is just phase 1. This is not the whole project. And this is not including their zinc asset, which is worth many millions. So I look at Global Atomic and I think it's cheap. Of course I do. But I can afford to put a little bit of my portfolio, a little bit of my net worth on something that's super risky, because next quarter, my husband's not going to knock on my door and say, honey, why are you investing in a country where there's a coup that's just happened? Like, that's super dangerous. That's not how it works in the real world. I hope that's not how it works for you. If that is how you have to explain your investments the way, then I'm very sorry. And maybe it's a good, clean way for you to maintain your investments, you know, up to date, and you need to have conviction on whatever it is that you're putting your money towards. But the guys, she wants to make an appearance. This is it. And the cat is telling you, Global Atomic, for the small investor, yes, it's risky, but it's not overvalued. Right, Kitty? It's not. And by the way, there's another company that I don't find overvalued at all. I am biased towards them because they're a client of mine, but they're onto a really exciting discovery. And I think that the market hasn't quite figured out just how massive and high grade this thing could be. If you want to know more about it, click right here and find out more. I'll see you soon.